Hello, friends. To an update on the trade that I was posting yesterday. Just a very quick reminder: the trade idea was based on the week that was formed on a daily basis on Wednesday. I'm not gonna go into all the details. I will leave a link on screen to my previous video if you want to see all the other details. But in a nutshell, the trading idea was based again on the week developed on Wednesday, and the entry was on the zero point 0.5 fib of this week from Wednesday. I will move to a 1 hour chart to see the details, to remind you the details. So I set a limit here on the 0.5 fib with the initial stop loss right above this swing point and an initial target down below over here. An ambitious target, I agree, but nevertheless, this is the initial trading idea. And I was saying yesterday that I will take partials along the way, obviously, over here and over here. And the reason I'm doing this update is because we have hit the TP1 yesterday, and overnight we have hit also TP2. Sorry, TP2. Okay. And everything is going well. Okay. And I wanted to talk a little bit about this setup and the reasons why you should take partials along the way. As I was saying, I have already moved my stop loss right about here, I think. You will see it on the other video. The link is still on screen. So why this setup? Why taking partials along the way? Well, I think it's obvious the fact that we are in a very difficult period right now, where price is consolidating, is moving, doesn't have a clear direction, is moving up and down without notice, and it can turn against you very quickly. So just look on the 1 hour chart where we stand right now. It's a seek and destroy pattern where price is going up, down, up, down, up. I mean, you need to take partials, man, in this kind of environment, because you never know when the market will turn against you and take you out of the trade. Okay, so this is not valid. The idea of partial is not valid only for this kind of difficult markets. It's valid at all times, especially when you take trades which are supposed to take longer, to develop over a longer period of time, maybe hours or days, as it's the case right now. And I wanted not only to show you how useful it is to take partials and the reasoning behind it, but I would like to take a moment to calculate how much money you could have made, or you can make, taking this sort of trade and taking this approach of taking partials along the way. Because yeah, you may consider that you are losing some of the profits by taking partials. This is true, but on the other side, I would suggest you consider the fact that you are securing profits. You are putting money into your pockets, and that's the safest place where they can be. Okay, don't leave everything on the table in the markets, because the market might take you, but take the money off the market, put it in your pocket, and then let the rest of the trade decide what they want to do. Okay, so let me show you. So this is the initial setup. Okay, and as I was saying yesterday, the risk per trade was 1%. Okay. So if the market turned against me over here and took me out, I would have lost 1% of my trading account. Fair enough. And as you can see over there, the risk to reward ratio is, for this whole trade to develop, is 1 to 6. So if this is right, you would have had a maximum profit of 6%. But because you took partials, that 6% obviously it's not 6% anymore. And let's see how much it is. I am taking partials of 30% and 30%, and I leave 40% to run, hoping that I will get here TP3 40%. Now these numbers can vary according to your risk appetite, of course. You can take 40, 40, 20. There's nothing wrong with that. But this is just an example of how you can use partials according to your risk appetite. But nevertheless, you need to use partials. Okay, I'm not stressing this enough. So let's see. So first TP was in this area over here, where the risk to reward ratio was 181. And we took off 30% of the position. So 0.3 times 1.8, this is 0.54, right? Second partial was here, 2.9. Again, we took 0.3 times 2.9. This is somewhere in the area of, let's round it up, it's 0.9. Okay. Now, we have two scenarios. If the 0.4 hits the final target, where we have a risk reward of 6, we will add 2.4 more percent. These are all percentages, okay? Percentage, percentage, percentage. So, in this first situation, the whole profit from this trade would be profit 1, let's put it like this. It's around, let's round the numbers, it's around 3.9. Okay. Now, if from here the price turns against me and hits my stop loss over here in this area, where the risk to reward is 0.5, let's say, okay, I will add not 2.4, but I will add 0.4 times 0.5, which is 0.25. So I have to add these first two partials here, which is more or less 1.5 plus 0.25, profit 2 is 175. Okay, nice. So this is the worst case situation as compared to where we are now. So best case situation, 3.9 profit. Worst case situation, 1.75. Either way, there is a profit. Big or small, but there is a profit. Let's continue the calculations and see. If I'm using a $10,000 account, then best case, I will make a profit, let's say between $175 to $390. Okay, a $20,000 account will yield me something like $350 to almost 800. Let's round it up. And for the $50,000, which is one of the most common, let's say, funded accounts these days, I would make somewhere around $900 to $2,000. Okay. So it's your choice what kind of account you are using. Either if it's your money or it's a funded account, it doesn't matter. But if you take such a trade and use this sort of risk management, you will end up winning. It's up to you again how much partials you take along the way, but you should take partials. And let's be honest, by any standards, a trade that has only lasted around 24 hours, either one of these numbers, it's not a bad number at all. I mean, you can make a living trading and earning this sort of money on a daily basis, right? I mean, it's up to you to decide that, obviously, but I think it's not a bad amount of money either way you take it. Okay, so this is the update for now. We are still in trade. This is the trade running on this micro E-mini chart. Where we are right now, remember yesterday I was pointing out to these two fair value gaps that were created by the price. Let me show you where they are, just like that. Okay. Please watch the video from yesterday. I was saying that I have lowered my stop loss right here because I was not expecting this fair value gap to be touched again. I was expecting it to behave as a breakaway gap. For now, this was the case, and it's still the case. We are still in the trade. Let's see what will happen in the next hours, because the price has delivered very, very slowly after an initial move which was very accelerated. Then it entered a phase where it was a very high resistance delivery. So let's see where we will end up. But nevertheless, for now, this is a breakaway gap. I will treat it as a breakaway gap, as initially planned. And even if it's going to take me out from here, I don't mind. I will be in one of these situations, okay, on this side of the table. And if it continues downwards, even better, I will be in one of the other side of the table, making more money. Okay, so guys, if you like this kind of content, please like, subscribe, and share. And I will leave on the screen the links to two of my other videos where I was talking about navigating difficult times and how we can make money trading. Maybe you find value in these videos, and thank you very much for watching. See you in the next one.